Hey everybody, Tim Albrecht here, and thank you for listening to the YFP podcast, where each week we strive to inspire and encourage you on your path towards achieving financial freedom. This week I had a chance to welcome back onto the show Tony Umholtz, a mortgage manager for First Horizon, formerly Iberia Bank. During the interview, Tony and I talked through the tips for securing a home purchase contract in a competitive housing market. So if you're looking to buy a home in the near future and live in an area that has a competitive market, this episode is for you. During the show, we talk about the current state of the housing market, interest rates, and trends Tony has seen through his experiences working with pharmacists across the country, why the lender and agent you choose to purchase a home matters, and the pros and cons of various strategies to make an offer stand out, including escalation clauses, appraisal gap clauses, and waiving inspection contingencies. Before we hear from today's sponsor and then jump onto the show, I recognize that many listeners may not be aware of what the team at YFP Planning does in working one-on-one with more than 240 households in 40 plus states. YFP Planning offers fee-only, high-touch financial planning that is customized to the pharmacy professional. If you're interested in learning more about how working one-on-one with a certified financial planner may help you achieve your financial goals, you can book a free discovery call at yfpplanning.com. Whether or not YFP Planning's financial planning services are a good fit for you, know that we appreciate your support of this podcast and our mission to help pharmacists achieve financial freedom. Okay, let's hear from today's sponsor, First Horizon, and then we'll jump into my interview with Tony. Does saving 20% for a down payment on a home feel like an uphill battle? It's no secret that pharmacists have a lot of competing financial priorities, including high student loan debt, meaning that saving 20% for a down payment may take years. We've been on the hunt for a solution for pharmacists that are ready to purchase a home with a lower down payment and are happy to have found that option with Iberia Bank / First Horizon. Iberia Bank / First Horizon offers a professional home loan option, aka a doctor or pharmacist home loan, that requires a 3% down payment for a single family or townhome, has no PMI, and offers a 30-year fixed rate mortgage on home loans up to $548,250. The pharmacist home loan is available in all states except Alaska and Hawaii. To check out the requirements for Iberia Bank / First Horizon's pharmacist home loan and to start the pre-approval process, visit yourfinancialpharmacist.com/home loan. Again, that's yourfinancialpharmacist.com/home loan. Tony, welcome back to the show.
Tim, thanks for having me. Always good to be here with you.
Really looking forward to this, our first recording together in 2022. We've had you on the show many other times before. We'll link to those in the show notes for folks that are looking for guidance in the midst of that home buying process. We've talked before about the professional home loan option, the pharmacist home loan, and we'll get to that at the end as well. But if folks want other reference and resources on that, we'll certainly link to those previous conversations in the show notes. Tony, I don't want to assume that all of our audience knows who you are. And so if you would just take a moment to give us some background on yourself and the work that you're doing with First Horizon.
Sure. Well, I'm a mortgage banker, and I've been doing mortgage lending now for almost 20 years. I'm afraid to say it's almost 20 years. It'll be 20 years in October. But we handle residential lending, and I run a team here, and we're based in Florida, but we lend all over the country. We're actually 48 states. So the lower 48 we're licensed in, and we handle residential financing, both purchase loans, purchase money, and refinancing. But it's been a lot of fun. I've had a lot of fun in my career. We're in a very interesting time now, Tim.
We are, and I appreciate you, as always, sharing your expertise. And today we're going to be talking about some tips and strategies for getting under contract in a competitive home buying market. I would say that's a timely topic for sure. And Tony, we've been talking over the last few years, and it seems like each season we talk, it's just a wild time to be buying a home, the home market as a whole. And so here we are in another time period. I think there's some uncertainty. We see some changes that are happening to interest rates for those, especially that are first-time home buyers. I think right to be a little bit anxious about the process and the competitive nature of what's out there. So from your viewpoint of working with pharmacists and others all across the country, just give us a quick summary of what you're seeing as we really get into the beginning of spring of 2022.
Sure. Well, Tim, you're exactly right. The market has been changing here this year. I mean, we had some of the lowest interest rates, the lowest interest rates we've ever seen as a country the last couple of years during the pandemic. And now they're just, slowly going back up again.
Mm-hmm.
But we're still at historic lows, even with the move higher that we've seen in the last, 7 months. So we're still near, very historic lows. Back when I started in the industry, 7% for 30-year fixed was actually not bad, and it's trended, lower during that time frame. But it's we're in this time right now where we have a housing shortage throughout most of the country, and a lot of that happened post the downturn of 08 and 09. We just didn't build enough homes and apartments for the population growth. We saw people moving in together. Builders couldn't get financing for a number of years. So we went through a decade of underbuilding, and now this is the consequence. We don't have enough housing inventory and housing stock. And what's caused the further delay is that builders can't build as quickly as they'd like to because we have supply chain issues. So, builders can't, I work with builders as well, and they'll tell me, it's taking me 6 months to get roof trusses, and, different things, different components of the building process are constrained. So they can't output the number of units for demand. And I think that's a good thing over time. I mean, they're going to catch up eventually and it'll normalize, but we're going to be in this type of market for foreseeable future until they can catch up.
And naturally, Tony, what we see then is, and of course we're generalizing across the country, certainly different in different parts of the country, different markets, but that means home prices going up, significantly, supply and demand, more people that are looking for homes. And we're hearing from our community, as to be expected, whether it's their first home, second home, or third home, that they're feeling the pinch, right? And for many pharmacists, we see great salaries coming out of school, but are relatively flat over the course of one's career. Obviously facing many folks, significant student loan debt that first decade or so of their career. And now we've got rising, home prices that are layered on top of that. And so, all the more reason that we've got to be thinking about the home buying decision in the context of the rest of the financial plan. And before we go into individual tips or strategies for getting under contract in a competitive home buying market, I'd be remiss if I didn't first say that we need to make sure that we're not losing perspective on the budget for buying a home and how that fits into the rest of the financial plan, right? As we say many times on the show, we can't look at any financial decision in a silo. And if the end goal is to get under contract, but we do that in a way that significantly disrupts the rest of the financial plan, we've got to obviously put that in check. So really taking a step back, what is your home buying budget? What is your personal situation as it relates to investing and saving for the future, other debts that you have incurred and are paying off? And how can we make sure we're purchasing a home in a way that also allows us to thrive with the rest of the financial plan? Tony, first question I have for you as it relates to getting under contract in a competitive market is, does it matter what type of loan someone may have? So if I'm a seller and I've got 10 offers that are on the table, and some folks are coming with maybe an FHA loan, a VA loan, a conventional loan, perhaps something like a doctor loan, a pharmacist home loan product, does that really matter in terms of what type of loan someone is bringing to the table as they're trying to bring that competitive offer forward?
Well, it certainly does. I think it's a really good question, because when you get an FHA or a VA pre-approval letter, if you're a seller, and if you haven't had experience with that, there's typically a much stricter appraisal that's done on your property versus maybe a conventional loan or like a special pharmacist or doctor product. It's going to be a much more stringent appraisal, and it's just because those loans, FHA and VA loans, are federally backed loans that are backed by what's called Ginnie Mae. Which, anyway, not to get into the complexities of the mortgage market and everything else, they've got sets of guidelines for these products. Now, they're good programs. They have opportunities for individuals to qualify for different things. But as a seller, you're going to probably, if all things being equal, right, if that price is the same, you're probably going to want to avoid those offers, just because they do come with some extra, like a couple extra sets of eyes. And the other thing too, that just so with both these types of loans, if you get the home appraised and that appraisal comes back lower or whatever it might be, that's attached to the home for quite a while. So that seller cannot, if another buyer comes in, they have to use the appraisal that was done on your unit. So there is some overlays to those two products. So that would be probably put you in a more inferior position.
One tangible story I have here, Tony, personal experience. We were selling, my wife Jess and I were selling our home up in Northeast Ohio before we moved to Columbus, and the buyer had an FHA loan. And I remember during the inspection process, this was my delinquency as the homeowner. I think one of our boys had, like pulled the railing off the wall, or just something normal that happens in our house of 4 boys. But, I was in the process of kind of getting that back up of the rail going up to the stairs. And at the time when they came out to the inspection, and there wasn't a whole lot of notice, they took a bunch of pictures and whatnot, and they had requested that be put back on. And they had to come back out to see that it was put back on. And this was in a pre-pandemic time period. So maybe now they allow for photos or other things, but that time gap could be significant, right? If you've got multiple offers and things that are going on. And if folks, again, are looking for ease of closing, and they've got options of different buyers with loans that may not be as stringent, it certainly could be something that can come into play.
Absolutely. There's no question. It happens all the time. When we do approvals for, we do FHA and VA loans too. And when we have them, I have listing agents call me and tell me these things. So this is just from experience, but there's no question that can put you at a disadvantage. But again, those programs are there to serve a purpose. They're not bad loan programs for different people. They all have pros and cons. I don't want to downplay it, but they certainly, if you are qualified with either of those products, are going to put you in an inferior position, going into getting the offer for sure, into getting the contract accepted.
Next thing, Tony, I want to ask you about is the who on your team. Specifically, first, I want to talk about from the lending standpoint, and then second, from the agent standpoint, and really highlighting that not all options are created equally. And I think when it comes from a lending perspective, speaking from personal experience as a former first-time home buyer, I was very fixated on getting the best rate, right? That was something that had been drilled into me that, you're looking at something over 30 years. On a $300,000, $400,000, $500,000 purchase, 0.1 or whatever would be the difference can be significant, but not stopping there. I mean, of course, a competitive rate really matters, but other things, communication, timing to close, accessibility of that individual during the process, so important to bringing a competitive offer forward. Tell us more about how we can really evaluate and consider the lender that we're using.
Another good point, Tim. I mean, during this time where everything's so competitive, I mean, most markets around the country have less than 2 months of inventory. So it's very much a seller's market and very competitive. We had a situation happen this weekend with my team, and we had a borrower that said, "Hey, I'm going to go in at this set purchase price for a home." And they actually had to pay quite a bit more. And the seller was going to go with them, but they didn't have a letter stating that. And they were approved for that amount and even more than that. But they thought for like a negotiating tactic would be, "Hey, let's go in at this, what my offer price is going to be," which was undervalue. And they almost didn't get the contract. But fortunately, a member of my team was able to send them the updated pre-approval letter this weekend so they could get the house under contract. So communication is really important, and especially during this time. And I will say also that the listing agents call us, and we don't disclose anything personal, and we can't do that. But a lot of them will want to know, "Hey, can you close on time? Can you get this done? Can you get an appraiser out there and have this, an appraisal done in a meaningful matter of time?" And also the commitment letter deadline. A lot of contracts have what's called a commitment letter, which is basically a formal underwriting approval where you've been through underwriting formally. And a lot of ours are done like within a few days. And some other lenders may be like this too, but having that done quickly is so important. And being able to get underwritten quickly and having open communication is critical with a lender in this time. Because it's, I always tell people, you can go with, certain lenders if you're just refinancing. If it takes 90 to 120 days, it's okay. It might cause some stress a little bit for you, but it's just a refinance, right? But on a purchase, you have to hit these deadlines, you have to hit these timelines, or you could be out of contract. Not only lose the contract, but also lose your earnest money too. So, but yeah, it's very important. And I would also say with the agents too, your real estate agent, it's very important that you have a good real estate agent that knows the market. And I've seen just from my years of experience, I've gotten feedback where listing agents would call me and say, "Hey, this buyer is represented by so-and-so. We'll call it, Mr. Smith. And everything he brings me has been, over the years, has been great. He's always transparent with me about his buyers. He keeps things together. And I have these 6 offers, but I think all things being equal, he's always treated me right. So I'm gonna go with him." I've heard that just because they feel, all things being equal, right, that all these other buyers kind of equal pricing, whatever else, I know that what he's telling me from experience is going to happen. So I think having a very good, realtor who's trusted in the market and has a good reputation can really help you get a contract right now. That's a big thing, big deal.
Yeah. And it's the second or third time, Tony, you've mentioned, with all things being equal, right? I think that's worth highlighting that, you can have the best lender and the best agent, but if you're not bringing a competitive offer forward,
right,
that's not going to help you. But I would argue, a good lender, that's a partner and a good agent who really knows the market, assuming it's within your budget and other goals and whatnot, they're going to help you put forward a competitive offer, right? So those things I think do go hand in hand. And shout out here to Nate Hedrick, friend of YFP, who does our home buying concierge service, who helps connect pharmacists with agents in their area that are certainly going to be coming forward as someone who is reputable and able to take someone through that deal. And so we've got a home buying page where folks that are looking to get connected with an agent, looking to learn more about the First Horizon professional home loan option. If you go to yourfinancialpharmacist.com and then click on home buying, you'll see all that information and can read through that further. Tony, one of the things that I'm hearing a lot in this competitive market is escalation clauses and why it's potentially valuable to have an escalation clause built into the contract. What is an escalation clause and what are some of the potential pros or cons that people need to be on the lookout for?
Well, the escalation clause are essentially saying we're going to pay, we're going to stay in this bidding war, right? We're going to stay in this bidding war for this property and we'll go up X amount. I have seen these happen where, you're putting in your offer and you're willing to go X amount higher than just to keep up with the next guy, right? So whatever that number might be, $10,000, $5,000, 10% or 5%. And you're escalating above the sales price essentially.
Yeah.
And we're seeing that happen, right? There's a bid up of housing. So, the pros and cons, clearly the pros are you can stay in the transaction and maybe it'll help you secure the home. The cons are, you may be bidding it more than it's worth. And when we have that appraisal done, you're going to have an appraised value that might be at the original purchase price or sales price where they started. And now you're paying, let's say 10,000 more than where you started because you participated in the escalation clause. And now when we get that appraisal, you're $10,000 under the value. So lenders can only lend off the original appraised value. And if you owe 10,000 more, because if you want the property, that's what you're going to have to do because there's other buyers that are willing to do it too. Then you're going to be bringing your down payment plus the 10,000. And that's the risk, Tim, is that you're getting in a situation where it may not appraise and you're having to bring more money to the table than you anticipated in the beginning.
Yeah, and I think this, is a very natural feeling in the moment, right? Where people are living in areas where they're hearing of 30 showings in a weekend and 25 offers that are on a home. And so you come in at maybe asking or a little bit more, and then you put these clauses that go up another $20,000 or $30,000. But then the risk, as you mentioned, which is, part of just the reality of the market, but also one that somebody has to be planning for is, what happens when you have to bring more cash to close? Are you ready for that? Right. And what does that mean for the rest of the financial plan? Is that coming out of savings? Is that putting you behind on other goals? Or is that something you can cash flow without causing too much headache or concern? Tony, the other thing I'm hearing a lot, of course, again, as we're talking about just a competitive market is waiving an inspection contingency. And that one gives me a little bit of heartburn, but I didn't buy a home in the chaos that is today's market. So has this become the norm? What is this all about?
Well, I never recommend it. So I'm in the same boat as you. I've had a few of my clients ask me this, and you just never know what you're getting into. And you want to know, is my roof going to last? Is there another major issue, a foundation problem or whatever it might be? I always think you get an inspection and then you know what you're getting into. And so I'm not a big believer in that, but I do know some clients have waived it, especially if they're familiar with the property and they've been looking at it for a number of years. And so I had someone that it was a property they had been in before, someone that they knew lived there and they wanted it and they knew it was good and sound. So I think I would not be in a case where I would not waive it personally, and I do not recommend it, but so that would be my opinion. But again, it happens. And as lenders, we don't look at the inspection. We look at our appraisal,
Yep.
but we don't look at the inspection. So we don't need it. We don't require it. So anyway, that's just some feedback from us. I would say that I'm a big believer in getting an inspection though.
Yeah, just define this further for those that are first-time home buyers. So inspection contingency meaning that the offer would be contingent upon the completion of an inspection, and that inspection often would allow folks for an out. Right. If something significant would come up, and so by waiving that, you're essentially waiving the contingency of that results of an inspection. So
that's right.
You either have a really good understanding of the home, or you're taking on that risk, that there might be something there.
Or what happens too, Tim, if they waive their inspection rights and they decide not to buy the home and they put $5,000 in earnest money to secure the contract, they walk away from the contract, they lose the $5,000.
Yeah.
So that's what's happening. And I've had people call the real listing agents and say, "Hey, look, we've got two offers that they're waiving their inspection contingency," and so in that case, what it is if they put their earnest money up, they'll lose it. If they can still get an inspection, but if they walk away from the contract, they're going to lose their money.
Got it. Got it. Good clarification. Thank you. Since you brought up earnest money, Tony, let me ask about that. Maybe I'm dating myself. Last time we bought a home, 2018 would have been. I feel like the earnest money was more in the $1,000 range. You just mentioned $5,000. Is that something that we have seen go up in terms of earnest money that folks need to be planning for? Hopefully that they would be able to recoup those dollars. But you gave an example where that maybe wouldn't happen. Is that earnest dollar amount going up in this competitive market? And does offering more earnest money make a difference?
Well, so I normally see a couple things here. I think I normally see, Tim, earnest money is more tied to the price of the home. So if it's a larger contract, usually a little bit more earnest money versus a smaller purchase price. I think on average that those earnest money has gone up a bit, but I haven't, I would say on average it has, but I definitely believe the more you put up, the stronger your offer is going to look. Mm-hmm. So if again, all things being equal, you have the same price and one person puts $1,000 earnest money and the other puts $5,000 and all things are equal. Well, if I'm the seller, I'm taking the $5,000 because, I have a little bit more if something goes wrong, right? In this transaction. So I think a larger earnest money deposit definitely puts you in a better position. Again, you want to have some, typically in the contract, there's going to be a inspection contingency, an appraisal contingency, and a financing contingency. Those are the three main pieces. And if you have those in place in the contract and one of those things falls through, you have an ability to get out of the contract and not lose your earnest money. Yeah. So that's the importance of having those pieces in the contract. But all things being equal, I think the more you can put down, the stronger you're going to represent yourself to the seller. But then again, a lot of these programs we offer don't require a lot of money down.
That's right. I was going to ask that. Yeah, exactly.
Yeah. So I will say this: it was another program, but I had a builder call me and said, "Hey, we require 10% to build the house for this client, and I see that your approval letter says 95% financing. So are they basically going to get 5% back at closing?" And I said, "Yes, because they advanced money to you to build the home. And then when we do the loan at the end, we're going to give 95% financing. So 5% of their earnest money will come back." So different situations but clearly, that everyone's different in how much they can put up. And I think, speaking with their realtor, it's, they can get a better idea of what's a good offer.
Tony, to that point, I would imagine if someone is selling a home and there's, 10, 12, 15 offers, I would expect we're seeing more cash offers that may be out there. And so if I'm a first-time home buyer, and I'm looking at a, option that has a lower down payment, I'm wondering, do I even have a shot in that market? So in terms of competing with cash offers or even offers that have more earnest money down, what advice, what thought would you have there?
So in that case, so there's all sorts of sellers out there. And You're right, Tim. A lot of cash offers. Typically, cash offers are lower ball offers, a little bit lower than market, right? Most of them do that because, hey, if I'm paying cash, I want a better value.
Yep.
So they're going to ask the seller to sell it for less. So a lot of times people with financing will pay a little bit more, and that's how you're able to secure it above them because you're paying a little bit more than the lower ball cash offer. Now, the other thing with cash is not all, but a lot of them are investors, right? They're investors. It might not even be people. It might be corporations that are buying rental properties. Yeah. And some sellers, I mean, not everyone, but some sellers, if you've like raised your family in a home or your kids have been in this house and your family's been in this house, you kind of like the idea of another family moving in, right? And, or another owner occupant moving in, and not necessarily a family, but just someone that's going to live in my house and take care of it like we did. You know, that's the mentality some sellers have versus some investor coming in, right? Mm-hmm. And I think that sometimes can connect with people too. And you know, you might have to write a letter or say, hey, this is who we are. And again, I'm just giving an idea here, but I think that can hold value. All things being equal, if I have a pre-approved person, they're going to pay $5,000 more than the 10 cash offers are. Hey, I'm going to live in your house, and this is where we're living, and I own it, owner occupied, versus those 10 cash offers where 90% of them are investors. Right. Yep. So I think that's a good way to kind of position yourself differently. And I think, you know, we're talking about all these things, guys, and it sounds, you know, scary and it does. It's like, why would you want to compete with and deal with this? Well, the reason there's all these cash offers is we have the housing shortage and rents are escalating at a faster pace than appreciation on housings is. Yep. So that's why owning real estate is valuable right now, because the rental market's going up faster than the percent appreciation. So, but I guess all things being said, any connection you can have with a seller can help you in this market and help you compete with cash. But naturally, you're going to have to typically pay a little bit more than cash normally to get the home.
Yeah, good clarification that, you know, often cash offers generally speaking, might be a little bit lower and also might have a greater, you know, pool of folks that are looking at that as an investment property. So, you know, again, if somebody was selling and is owner occupied and they want to maintain that as an owner occupied, you know, unit, that could be good to be able to communicate that to the seller.
That's right.
Tony, other strategies out there? I know there's a myriad of things, you know, that I've heard different folks use in terms of, you know, helping out with seller costs. That, you know, that could be moving expenses. It could be having some flexibility with the seller, allowing them to stay in the home longer. Other strategies that you're seeing or recommending that seem to be working in terms of, you know, again, getting under contract in this competitive market?
Well, again, we mentioned the seller. I have another contract that came in where some folks connected with the seller, and that seller stayed with them even though they could have went and got a higher price on the market if they listed it. So that connection with the seller anyway is important. Now, what they did do, I will say this, they're letting them stay in the house 60 days after close so they can move all their stuff out and take their time, because their place won't be ready until then. So clearly any sort of, you know, connection with the seller on some other variables is going to help you get the contract. You know, if you allow them to stay in the house. Now, you got to be careful with post-occupancy agreements, because meaning that the seller is going to rent back from you or stay in the house a set amount of time after you purchase it, because most buyers that are listening are buying to own or occupy the property. Mm-hmm. And if you're essentially buying it and letting them lease from you for a period greater than 60 days, it can be looked at as a problem with the lender. So you do have to keep that in mind when you're allowing someone to stay. But I think flexibility is really important way to help you look stronger in the eyes of the seller. Just meeting them on other terms that aren't just financial, you know, giving them that extra time, because a lot of sellers are maybe moving into a new condo or they're downsizing into a new community where it's being built and the builder's taking a little bit longer to build the property. So there's always these other variables. I think learning as much as you can about the seller and the situation can help you in getting that under contract.
Great stuff, Tony. As always, appreciate your insights from your experiences each and every day talking with pharmacists and others across the country looking to purchase a home. I think this is a good segue and transition to talking more about the pharmacist home loan product that is offered by First Horizon, formerly Iberia Bank. And we've got Lots more information, educational information. You can learn more about this product and other information related to purchasing a home. If you go to yourfinancialpharmacist.com/home-loan. Tony, give us some of the highlights, some of the key facts as it relates to the First Horizon Pharmacist home loan product, down payment, how that works with PMI, maximum loan amount, and then we'll reference folks to more information from there.
Sure. So we will allow up to 97% financing if you're a first-time home buyer, so 3% down. And then if you've owned a home before, it's 95% financing, so 5% down. And as Tim mentioned, there's no PMI insurance, which is the most compelling piece of this. And we do have a minimum credit score of 700, a maximum loan amount currently of 647,200, which serves plenty of markets at that size. And then we offer a 30-year fixed mortgage. So, and the rates tend to be every bit as good as if you put 20% down for a normal buyer. So that's what's been compelling too, is you're not getting penalized to put less money down. And there's no prepayment penalties. So it's got a lot of flexibility for those that are in this occupation. So, and we can write it, as Tim mentioned, 48 states. Alaska and Hawaii are the only two I can't write it. So we haven't gone that far yet.
Yeah, that was really a big part of, when we formed the collaboration, Tony, a few years back, was a national option for pharmacists that were looking to make that home purchase, right? So you mentioned the lower 48. Obviously, we've got a community of pharmacists all across the country. So really, really grateful for your insights and the contributions you've made to the YFP community. And again, if folks want to learn more about that product, you can go to yourfinancialpharmacist.com/home-loan. Tony, great stuff as always, and looking forward to continuing the conversation as we go throughout the rest of 2022.
Thanks again, Tim. Enjoyed being with you today.
Before we wrap up the show, I want to again thank this week's sponsor of the Your Financial Pharmacist podcast, IberiaBank/First Horizon. We're glad to have found a solution for pharmacists that are unable to save 20% for a down payment on a home. A lot of pharmacists in the YFP community have taken advantage of IberiaBank/First Horizon's pharmacist home loan, which requires a 3% down payment for a single family home or townhome and has no PMI on a 30-year fixed rate mortgage. To learn more about the requirements for IberiaBank/First Horizon's pharmacist home loan and to get started with the pre-approval process, visit yourfinancialpharmacist.com/home loan. Again, that's yourfinancialpharmacist.com/home loan. As we conclude this week's podcast, an important reminder that the content on this show is provided to you for informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on the podcast. Opinions and analyses expressed herein are solely those of your financial pharmacist unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you again for your support of the Your Financial Pharmacist podcast. Have a great rest of your week.